My name is Sarah Snell Cooke, and I'm your host here at the Credit Union Connection. I'm here today with Patrick McElhenie from Scienaptic. He is the Chief Growth Officer there. Welcome.
Great to be here, Sarah.
Yeah, awesome to have you. So, why don't you give us a little bit more background on Scienaptic and yourself?
So yeah, Sarah, I have been working in the credit union industry for like 25 years now. So serving in various capacities, primarily with institutions that support credit unions.
Hmm.
Firm believer in credit unions, and in my mind, I've always thought this way: they are the best financial institution option for any consumer across the country.
Hell
A
yeah.
true blue believer in credit unions and that cooperative spirit. I don't believe there's any other industry that operates quite like credit unions do, and it's a wonderful to be part of it. Synaptic, really, what we do is we provide AI solutions to help credit unions make better loan decisions in an inclusive and in a fair manner. AI, everyone's talking about AI. We've been doing this for, over 10 years. And our ability to help credit unions serve the underserved, reach those members using AI, using
Hmm.
machine learning to basically make quicker decisions, go deeper into their membership, making sure they're actually connecting with the members that really need their help. Our solution does that. And I can't think of any other way to truly help a credit union live out their mission and people helping people than a solution that's approving more loans in a safe and inclusive and a fair way. And that's exactly what we do using AI technology.
All righty. Well, you hit everything. Video's done. Talk to you
Yeah,
later.
it's all over.
Done. Yeah. So I mean, it's like AI is making credit unions more credit union-y,
Mhm.
and it's a real opportunity because it's changing the speed of everything, as you mentioned. This is all about, now credit unions have to beat fintech, they have to beat the neobankers to making that offer. It's not you can wait a couple days or even sometimes a couple hours to make that kind of decision and make the offer and fund it. So are credit union leaders open to what it takes to implement AI in their shops, as well as, what are you hearing as far as pros and cons from the credit union leaders?
Yeah, the openness is absolutely growing, especially post-pandemic. Credit union leaders and credit unions everywhere just recognize that speed is no longer a luxury. It's really an expectation and a necessity. I mean, think about, you can actually order a product off of Amazon and get it the same day. I mean, so
Hmm.
these expectations from a consumer and from a member perspective absolutely are changing. And credit union leaders are absolutely adopting, yes, we have to be there. It's an expectation. I mean, pros, right? Let's talk about pros of AI and what this can do. I mean, it's faster approvals. We're making decisions on a individual member on with 4,000 different data elements in milliseconds. So the ability to render a decision instantaneously is key. That really helps also provide less friction in the process. AI provides greater consistency in the process by all means.
Hmm.
And it's a deeper reach into that membership base. Again, we opened up helping people, right? Reaching those
Hmm.
members in an inclusive and fair way. That's what AI does. And those are the pros that we're seeing and doing it with speed. I mean, what are the concerns we see? Well, let's face it. What's AI is change. It's about change management, right? When you lose manual control of a process that's been around for 10, 15 years, that's a big change. I'm an individual that's been touching every loan application that comes through. And now it's all of a sudden, ooh, 60 to 70% of these applications are now being approved. That's a big change. So we hear a lot about that. A concern would be regulatory compliance, obviously, but I'm sure we'll talk about that later in this interview. And then another concern we hear about with AI that is complexity. I mean, let's face it, every credit union has probably had a frustrating time when they've implemented new technology, but through our solution, a no-code AI solution, we can actually explain through it and overcome all of these concerns, that we hear as it relates to implementing AI.
And is there a type of credit union that best benefits from the implementation of AI? Is it large? Is it small? Is it, you know, ones that are more into business lending or more complex, simpler? Who's the ideal candidate for adding AI into their strategy?
Well, I think every credit union,
Every
to be
credit
honest with you,
union.
every credit union, because AI really enables that credit union to fulfill their mission. A
Mhm,
credit union mission always is going to be about their member and how they're helping their members, how they're making their members' life better. And again, through an inclusive and fair way to extend more credit in a safe way for the credit union. I
mhm,
mean, everyone can benefit from that. So
mhm,
I don't think there's any credit union that shouldn't be using this type of a solution eventually. Now, we have to be real.
mhm,
There are some very small credit unions out there, but I do believe that this is a solution, and we're going to see this solution continue to scale in the marketplace. And
mhm.
so you'll see more and more credit unions having that. So I wouldn't say it's for one particular type of segment of the credit unions. I think it's for all credit unions.
Yeah, I mean, and that makes total sense, especially like the larger ones need to be able to handle things and maybe not add so much headcount, or the smaller ones already don't have the headcount, so they need somebody to
Yeah.
automate as well. But I also think the compliance point is important too. I would think, you're taking in a loan application, that AI doesn't miss whether a field is open or not, or filled or not, or that application, or for example, following fair lending, things like that. That I feel like it seems like credit unions would be better off
Mhm.
compliance wise.
Oh, absolutely. I mean, if you think from a compliance perspective, our solutions are fully FCRA aligned, ECOA aligned. We have bias monitoring in there. We have adverse action and reasoning. So from a compliance
Mhm.
standpoint, they're very defensible. And all of our clients receive 100% scores when they go through an audit or when they meet with regulators. So
Mhm.
in fact, because of the transparency of AI and everything that we provide, it makes those actual events easier.
Mhm. Yeah,
So,
and those adverse. Oh, go ahead.
no, go ahead.
I was going to say those adverse action reports are super important for compliance, and we've been using credit scores for like 50 years now, which is
Oh,
amazing. I didn't realize they didn't exist before then until relatively
yep.
recently. And we're beginning to incorporate alternative data into that process too, and so AI is a significant part of that that makes it possible and faster and cheaper and easier.
Oh,
Um,
absolutely.
what does that mean for underwriting? We already talked a little bit about compliance and then also loan approvals versus rejections.
So if you think about, a recent study says that 45 million Americans uh, aren't served by a credit score. And Uh, credit scores alone can miss up to about 40 million Americans, especially those that are focused on the gig economy, those that might
Hmm.
have a thin file, and those that are the younger generation that are still trying to build credit.
Hmm.
I mean, traditional credit scores miss these individuals. And that's where AI comes in because, we call it contextual underwriting. So what we do is we can bring in alternative data and we can start to layer then, what are some of the transactions we see, historical transaction for this particular member. We can look at utility bills, we can look at rental payment history. What this does, it builds what we call a 360-degree view of that member or that individual. And then that allows for truly that inclusive and fair decision to be made. And again, layering all of this data in, it's done in milliseconds,
Hmm.
right? But we're able then to reach those that have been missed by that traditional credit score. And that's what makes this so impactful because that's truly, again, goes back to, and I'll say it again and again, a solution that truly helps the credit union meet and fulfill their mission, and that's what
Right.
this is about. So we've got compliance covered, we have underwriting covered, and we're helping credit unions reach those members that they may not have been reaching otherwise through traditional credit scores. I mean, that's what we're passionate about. See, I get kind of worked up about
Yeah,
it,
you do.
but that's what because that's what we do.
Hmm.
And when you can take that solution and say, and I mean, have a positive, you can go to data that says we're helping you fulfill your mission. I mean, intrinsically, that just makes you feel good, right, as a person,
Of course.
but it also makes you feel really good as an organization.
Absolutely. I can totally see that. And I love that you're so into like credit unions and so many vendors just want to sell a credit union widget. And it seems like you guys are really working to be partners and understand credit unions. I mean, obviously
Yeah.
you came from the credit union space, so uh,
Hmm.
very cool. And so what sort of data do you have to show that AI is improving the quality and quantity of loans for credit unions and maybe reducing charge-offs? Because right
Oh,
now
well,
collections are going to be big. It seems like heading that way.
absolutely. So, we are an AI company, so we do have a lot of data. So I don't want to bore you with too much data, but let's talk. We can talk about approval rates because that's important, and we can also kind of touch on delinquencies as well. What
Hmm.
we're seeing is that uh, our clients typically see about a 25 to 50% higher approval rates. When they have actually implemented our solution, and that's across an entire consumer loan portfolio. Again, because using the data, looking at that 360-degree view of each individual, we're able to look at elements that traditional sources aren't able to look at. So we're seeing approval rates anywhere from 25 to 50% greater. But what's even cooler is we've seen a reduction of about 20 to 45% in delinquencies because of better risk differentiation.
Hmm.
We're looking at behavioral data and we're looking at alternative data. And because of that, we're able to look at that risk differentiation in a different light. And then we're able to see that a reduction in delinquencies around 20 to 45%. We have a credit union, a large credit union in Colorado that is a great client of ours. They saw $9.5 million incremental loan growth, across their
Hmm.
consumer loan portfolio. At the same time, they saw 60%, 66% uh, automated approvals. Think
Hmm.
about that. All of a sudden, you have a group of people that now don't have to touch every loan, but they can just truly focus on the ones that are important. They can really take their time and strategically focus on the members that do need that
Right.
special treatment because of the increased automation. They also saw an 87% drop in delinquencies, like in used auto loans, but then a 47% overall drop in loan losses within their entire consumer portfolio.
Wow. Big
And we
numbers.
another large credit union in Arkansas, same thing, 63% increase in automation and a 24% drop in loan losses across the entire loan portfolio. I mean, it's
Hmm.
just you see that, and that's the data that makes you feel good because then you're living out, you're helping that credit union fulfill that mission. So
Hmm.
it's very satisfying. And again, it goes back to a lot of the time we hear, oh, AI is just going to drive this and drive that. It's going to drive increases. Absolutely, it does. But at the end of the day, we're actually enhancing the individual that's doing the work because we're releasing them from some of the manual tasks that maybe they were doing. Again, to focus on more strategic activities and really focus on the members that might need their help. So AI isn't replacing underwriters. It's actually enhancing their job and making their job easier and making their job more strategic.
Absolutely. And some of those people, like you mentioned, the ones on the formerly gray area, I guess, of whether you approve them or not,
Mhm.
those people might be the ones who also need that extra time. So, yeah,
Absolutely.
true return to the member for sure.
Yeah.
And so, right now, we talked about delinquencies a little bit. Delinquencies are on the rise.
Yep.
And that means financial difficulties for many credit union members and potentially eventually credit unions. Um,
Right.
we saw that in 0809. Um,
Yes.
but how are credit unions adjusting for the current uncertainty?
many credit unions now, what we see are they're shifting from kind of this static to dynamic risk management. And what I mean by that is using AI in a proactive or preemptive way, because AI can look at kind of behavioral patterns, and we can look at cash flow, like real-time cash flow. These risk signals are created real time, and those risk signals then can help a credit union really be proactive before a member starts to get into, delinquencies and start goes into, getting into trouble. They can reach out to this member and they can maybe, okay, maybe we need to do loan restructure, or maybe we do need to prioritize some of our collection activity,
Mm,
so that someone doesn't necessarily go into default. That's what AI can do. It's that provides that proactive ability for credit unions to reach out and work with individuals to avoid
mm,
something that maybe that could be avoided because of again, loan restructures, those types of things. I think that's where you're seeing the ability of delinquencies going down, because now where it's real-time data, it can be preemptive, and we're taking the credit can take proactive behaviors. I mean, I think
hmm.
it's awesome.
Yeah, and that goes to my next question. How does this deepen the member relationship and the
Oh,
experience for the member too?
yeah. I mean, let's think about what makes someone loyal to an organization. Uh, I think when they're treated fairly, I think when there's less friction in the process, I think when there's trust in the process. Um, Number one, and those are some key elements to deepening a relationship, because we want things to be easy. And when I can get an instant decision on, a credit application or a loan, okay, I love instant gratification like many people. So I get an answer yes right away. That's great. I think that builds trust. It makes things easy. And but AI also helps personalization, because of the amount of data we're looking at, because of some of the other solutions we can offer in terms of looking at a member's profile. We can offer the right product at the right time at the right price, but it's based on personalization. So what that does, then all of a sudden now you're creating this emotional connection. Now you're creating this financial connection, and you start having that type of emotional connection with a credit union or any other you know you know vendor you work with, or any other of your partners as a member. That's going to be drive loyalty. That's what it does.
Mm-hmm.
So I think that's great. And again, I mentioned this earlier, but it's all about inclusivity and fairness. Our solution really is looking at, how can we reach those members in other, in protected classes that need help as
Hmm.
well. I think that truly builds loyalty. And I think that truly shows that, as an organization, we care about the community that we're operating in. When we're
Hmm.
able to touch all those different classes, of people that, may not be getting credit, or are getting credit at places we don't want them to go. We don't want
Right,
them to go down to the payday lender.
right.
I mean, so we're able to help that too. So I think it just drives loyalty, and that drives that connection, and that's just going to spur more growth for the credit union long term.
Yeah. Yeah. No, when my husband and I were young and dumb, got in a little bit of debt, and our credit union helped us out with a, equity loan on our house and to pay down some higher interest debt. And I ended up serving on the board of that credit union for 12 years, kind of like as a give back. And so I feel like people do
Mm.
definitely connect more when, they're given that second chance that I wouldn't have given us a loan, but but yeah, they are definitely more willing to give you that second chance. So anyway, we've talked about a range of issues today, that relate to AI. So, what would you like to leave our audience, our credit union audience, with? What's your final thought?
Number one, AI doesn't replace an individual. It doesn't replace a human. It actually enhances their job, makes their job more effective and more efficient, and allows individuals at the credit union to actually do what they're supposed to do, as people helping people. our solution is about fair and inclusive lending. And we can help institutions actually do more with less. And I think that's really important because now all of a sudden with automation, they're able to serve more members and they're able to do it with confidence, and they're able to do it in a way that's going to drive loyalty and just at the end of the day, drive more growth. So we know that over the next few years, AI is going to continue to kind of help define the industry. It's going to be more and more readily available. We were kind of one of the first to market, so we're excited about what we can do for credit unions, and just know that any AI provider you work with, make sure they're doing it in a fair and inclusive way. That's what we do, and we just love working with credit unions, and we love helping credit unions fulfill their mission.
Absolutely awesome. Well, thank you so much for your time today, Patrick. I appreciate it.
All right, it was great to be here, Sarah. Thank you.